Stocktwits Nation. It is Wednesday, July 23rd. I'm Katy Perry. He was Shay Boloor, and the amazing Tom Bruni is back because it's Wednesday. Good morning, guys. You're getting me at home today. I feel very exposed.
Thanks for being so vulnerable with us, Katy.
I know. I feel like I want to tell you guys secrets or something. You can see my books. There's literally a book behind me that says how to be an adult in relationships. So I'm glad that's not visible, but I just said it, which just defeats the purpose of it not being visible. But we got a lot to talk about today. Meme stocks making a comeback. It's starting to feel like I'm getting nostalgic for 2021. I don't know about you guys. Tom, what are some of the signals you're picking up that indicate we could be back in a place similar to where we were before?
Yeah, we are so back, and Stocktwits is the place to be for all this because we're the only place where real-time conversation is happening. So if you're playing a market that's based on where the attention is flowing, you have to be following the conversation. And I think a couple of stats stand out. There was something from Jefferies. The percentage of trading volume in stocks under $5 has hit close to 27%. That's topping the pandemic. So again, retail tends to trade penny stocks, things under $5 that institutions typically can't touch. And so an increase in activity here is showing kind of that exuberance in participation. Call volumes are also surging. I think they represent 68% of the total options market volume year to date. So again, people are betting on the bullish side and looking for kind of opportunities in sort of these names that haven't run and that have high short interest. When I was talking to Barron's yesterday, I basically called it the whack-a-mole market, where people are just looking for the next momentum trade. They're looking for kind of the conditions to be set, and I think there are a lot of high short interest stocks that have just been kind of left for dead for a while, and we're seeing people communicate about that, identify them, and then take to pre-market or aftermarket trading where they could really move the price and get in there and start the party and force the institutions to join. So it is quite the environment. Like I said last week, there are some signs that we should be getting a bit more cautious, at least at the index level and at least at the bigger picture like Bitcoin level after a huge run. So happy to chat about that. But yes, we are definitely in a shall we call it the mementum market, momentum-driven market? There we go.
TM. Well, what a time to be in your seat, Tom, and see all this going on and just all the data. And we talked about OpenDoor yesterday, I believe. But since then, there's a new darling. I think there's a poll, right? People's favorite meme stock right now, and it's not OpenDoor. It's something else.
Yeah, it is everyone's favorite place to return their Amazon orders, Kohl's. So I haven't been in a Kohl's in probably 10, 20 years, besides to return Amazon packages. So not something that was on people's radar. They had a lot of kind of activist activity last year. They were trying to, they were being pushed by 2 or 3 firms to, reduce their real estate holdings, change up their board, get the executive team out of there. And they were able to fight that off. But the structural trends for Kohl's are still pretty rough. They have declining revenues, declining margins, tons of debt. But they do have real estate holdings in kind of valuable areas. And that's kind of what people are looking into and saying, hey, maybe there's some value here. And so we saw the stock run up pre-market yesterday. It went from like $11 to over 20. And so now it's really up to management to see what they do with this situation. Do they kind of issue some debt, issue equity or debt, raise some money, get their balance sheet in a good place, and kind of stage a real turnaround? Or is this just another flash in the pan of their kind of long-term downward spiral.
Yeah, it makes you wonder what goes on in these back rooms, Shy. I wonder if you have any insight of just imagine getting memed and like you're just going about your day, your Kohls, your KSS, and then like the price doubles in a day and you're like, what the hell is going on? And you got to wonder like who's in those positions, how they're reacting. Shy, what would you do? I mean, you've been in these rooms. What would you do if that happened at a place you were at? Or all of a sudden, you are the darling of meme stock traders.
Listen, every publicly traded CEO checks their stock price first thing in the morning. Everyone is very active on what's happening with their stock. I think that there's a delicate balance on don't wanting to buck the momentum by doing a dilution exercise to strengthen balance sheets. Do you meet with your IR team to maybe reiterate a narrative because now the name is getting some spotlight that maybe some previous announcements were just lost in the wind, and now you can double down on that. There's a lot of levers that can be pulled right now. There is actually going, as crazy as it sounds, there are fire drill meetings that happen when there's a squeeze because this is like the time where they have the spotlight and they want to capitalize on it. And I think that it's a delicate thing because there's a lot of rules in place where you can't also pump your own stock in a specific way. But no, it's they all monitor it. They love it. And I'm sure GoPro right now is maybe going to order in lunch for their whole team because they just are celebrating their 90% move free market.
Yeah, we were like GoPro. I forgot about them being public. They were just existing out there. But I think you're spot on in that. Like if I'm an IR person right now, I'm trying to seize the moment. Like if you're one of these tickers, you're like trending ticker on Reddit. They could buy ads and not to pump their stock, but to amplify their investor deck and drive downloads or capture investor emails. These are just not things that these teams are normally doing. But it is an interesting moment. Let's shift from the $5 stocks because I know, Shai, you don't have many of those in your power player portfolio. But let's talk about the two big earnings we have coming up later. Let's start with Google. Thoughts on Google? I know we briefly talked about it yesterday, but how are you feeling today going into that one? Any insight or expectations around the type of picture they're going to paint for investors?
So I think Google clearly being up 10 straight days entering this print is probably causing some heartburn for a lot of investors because this is a name that's been discounted in the AI race, and they're thinking, oh, it's caught up for 2 straight weeks and in print. Is it sell the news? I think still, even with this run up, it is the most undervalued Max 7 name is earnings cycle. And I think it's severely offsides to discount their vertical stack in this super intelligence race because every company will need 4 things in the new digital economy. They're going to need their data, own their data. They're going to have their own distribution. They're going to have their own models, and they're going to have their own next gen brain. Google has all 4 of those things, but they're getting discounted due to the search cannibalizing their AI business, which again is very premature. It's going to evolve. I agree. Disrupt is a little aggressive. So I do think that Google is a name that even after its run up being at 20 times forward earnings, all it has to do is kind of go from a narrative pivot on disruption to maybe they're going to be okay, and that okay narrative will be enough for this to catch a bid. And also, people forget about their YouTube business. Everyone talks about Netflix. YouTube has a low teens market share in streaming. Netflix has 7-8%. So if Netflix is a $500 billion company right now, YouTube alone, theoretically, should be much more than that because of that 2x market share that it has on streaming. And people aren't going to go away from YouTube. Yes, search, I agree, there's competition. It's getting disrupted by ChatGPT, LLMs, etc. However, people will not leave their workspace products that Google owns. Gmail, Calendar, Meets, all of these, Google owns your day. People will not leave those products, and Gemini is becoming that connectivity layer between all their suite of products that they're going to be a major AI beneficiary. So at 20 times earnings, I'm like, okay, this is really aggressive. So this is a name that I actually have very high on my watch list because the only reason I'm not participating is I know how difficult it is to change a narrative. It takes time, and I think there is some opportunity cost at play with a name like Google. However, I think now is the time where they have so much momentum with they're building their models, their own chips, and you're seeing how difficult that is already with Microsoft. Maya is an absolute mess. Not a mess, but like it's just like they have to do so many derivatives just to catch up to where TPUs are. Same with Trainium. And you saw this morning news from Meta with Olympus. Like they're trying to get into their own custom AI chips as well. And that's a 2027 story. So this shows that how far, I think TPUs right now are like a 5th or 6th generation of custom chips that Google has. Like they're so far ahead. And I think this is a name that it's going to prove today, probably continue their Google Cloud dominance. YouTube's going to show strength. Search, spoiler alert, it's not going away anytime soon. I could see this name being above $200 in the near term.
Yeah, I think, first of all, I love the use of offsides there. I'm going to start using that when I think people are being stupid. I'll just be like, you're offsides. It's a nice way to put it. But I think you're right about Google. When you were talking, I was trying to find this tweet I saw yesterday that was going viral, and it was insights into cannibalization of search with Gen AI. And it was very misleading because it was one of those tweets that was like, it's so over for Google. But I think we talked about this a few weeks ago. You know, Google searches are in the trillions. That's one piece of their business. It happens to be what the logo is synonymous with. But Gen AI is still very early there, and Google is working on how to monetize their AI, to your point of owning every point across the day. So there is a lot of like, guys, when you see this stuff coming across your feeds, it's a great headline. It's definitely a trend that's accelerating, but we're nowhere near at a place where people are not going to websites. I think that's sort of the takeaway there. Tom, when you think about Google and look at community activity, what's the sentiment in Stocktwits right now? Are people pretty bullish going in, or is there a lot of chatter around that one, or are people mostly sticking to the $5 and below names?
Yeah, people are sticking with Google despite kind of the headlines over the last couple months. I think most people who are trading Google, it's not necessarily known for its high flying momentum as some of the other Mag 7 are, and so typically what we're seeing on the stream are long-term holders of Google. They believe in the story. They believe in management to be able to navigate this type of environment regardless of what happens. And like Shai's saying, their core business is, sure, they might have some erosion at the margins, but they're still intact, and this thing prints cash and is investing in the right areas. So I think people are looking past that and sticking with it.
Also, like I'm only talking enterprise and consumer. Tesla's another name we're going to talk about pretty soon, but like Tesla's $1 trillion valuation due to autonomy. Waymo, I don't think it gets talked about at all about what Google valuation should be with that lever they can pull. So I think this is just me reiterating. They have so many levers they can pull in their umbrella that everyone's just focused on this one search. I get it. It's 60% of their revenue. I want to say it's 80 to 90% of their profits, but everything else is catching fire. And I think everything else is hardening. The infrastructure side is hardening. Consumer side, I get maybe softening, but don't discount Google from their strategy going on cost per click. The blue links, that's how they make their ad revenue, to cost per tokenization, because they own everything. So they can control costs. They have the best margins in the game on their vertical AI stack that I think they can leverage tokens in the future, and they'll do just fine in the ad space.
You're right about Waymo not being I think it is centered on search with good reason, but doesn't Google own the majority of Waymo? Yes.
For sure.
So,
and that's the distribution angle I'm talking about. Like, Tesla has clearly millions of fleets of cars. Like, I'm not saying at all comparable, but there is a data advantage that Waymo gets from Google, and Google can pull that lever on real world data pretty quickly eventually.
yeah.
And again, LiDAR is going to become cheaper and cheaper. So like the cost of those Waymos will diminish, as Michael said, I think last week or 2 weeks ago. Like that is how tech revolutions work. Like initially, it's stupid expensive, but as time goes on, some components of what makes that device expensive diminishes. And I think that like right now, it's like $200K for a Waymo. I could see that being half the cost in like 5 or 6 years.
Well, you mentioned. Go ahead, Tom.
I was just going to say, speaking of Google, they kind of think of the narrative is, Google's a dinosaur. It's kind of a low and slow business. Like kind of is what it is. Another one is Apple. I think that one's been mostly left for dead, but over the last 3 months, it's done nothing while the market's rallied. It's starting to perk up this week. It reports earnings next Thursday after the bell, the 31st, I believe. So that'll be interesting as well if we kind of get this same type of run up that we're seeing in Google with Apple, because this isn't under the, I mean, it's silly to call Apple the second largest company or third largest company under the radar, but right now with everything else going on in the market, nobody's paying attention to Apple. And I think this could be another interesting one that the community is flagging.
I also think it's really important to zoom. Like the comment I made yesterday about zooming out, see what name has ran up into a print and what hasn't. Apple is between them and Tesla. I don't know who's like the worst performer this year among the Max 7, but it's not pretty for Apple. And I think that a lot of people are side eyeing on what their AI strategy is. And when you have your top AI researcher and he takes his two best employees with him away from your organization towards a competitor, you're like, okay, so things are actually, it validates the concerns that everyone has. Like, they don't really have an AI strategy. And I think, yes, their moat is 2.4 billion devices that they could be late, that provides them the luxury of being late. And there is no world where somehow Siri can become the ambient AI assistant that every person needs in their life in the next couple of decades. They're perfectly positioned for that. The issue is culture and also talent. Do they have the talent in-house to fulfill that vision, or do they have to acquire it? That's where you're seeing Perplexity become this hot name associated with Apple, because it doesn't really solve their AI issue. However, it shows the market intent that they are taking it seriously, and that's their way of getting talent in-house. And maybe that alone will catch a bid that, listen, this is not the Apple way. They last biggest acquisition, $3 billion in beats. This is going to probably cost $20 billion. So they know how disruptive AI potentially could be for them. They're taking it seriously, and I think that's a big sentiment win if they go down that route.
Yeah, to what Tom was talking about on the retail side, it is like this battle for attention. And it's funny, even in the last few minutes, we've talked about Apple and Google in the terms of Dinosaur, Left 4 Dead. It's like these are Mag 7 stocks, but I don't know if you're AAPL, how do you compete with, I don't know, Woof? Petco as the Woof ticker. That's one that's it's what Jake always says, but it's what tickers people latch onto.
Well, it's also, everyone's worried about the next Kodak. Like nobody wants to be the next Kodak. Or again, Intel is another metaphor I love to use. Different businesses, but Intel was the Nvidia of the compute market a couple of decades ago. Nobody thought Intel would go away. Like they thought, like, all right, they're set up perfectly for computes. Look what happened last 20 years. I think they're at the same spot. They're lower. So it's just like, it shows how, I think for Apple specifically, like they're in such a cash cow position that they don't feel the urgency to have to go outside their comfort zone to get ahead of a theme. They feel like they can play catch up. And that's fine, because for 2 decades, they've had zero disruption. They had zero disruption for like 17, 18, 20 years. Now it's the first time they're getting some glimpse of potential disruption. Maybe they're not taking it seriously. Their COO did leave, and their top AI talent is leaving. So maybe it's a wake-up call. But when you have your AirPod division make 3 times the revenue as OpenAI's total revenue, maybe they just don't feel like the urgency of like, we have to do this now, especially when valuations are so excessive.
You know why that is though, the AirPods? Every time you drop these things, it flies open and it's on purpose. I'll just die on that hill.
Well, you know, that's actually the perfect example of why Apple's revenue is kind of misleading. When you buy an Apple when do you pay for Apple stuff? When things slightly break. That's not a disruption model. Like I buy an Apple charger because, it's the wire's sticking out a little. I probably have to buy a new one. Your AirPod just fell out and you have to buy a new one. It's usually those kind of instances of why people spend money on Apple. It's not because of innovation. That's dangerous, especially when AI is going to kind of even the playing field a bit now because of all the tools and productivity boom. They can't kind of rely on that anymore. Not saying it's going to go away. It's a freaking juggernaut, 2.4 billion devices. But the comfort circle is getting it's getting changed, and they have to adjust.
Yeah, the walls are closing in. It does feel like consumer tech extortion sometimes. Tom, I think you were about to say something before I went on my rant about this case opening every time you drop it. Any
Yeah,
thoughts
no
on what
worries.
Shay was talking about there?
Yeah, I was just gonna say, I think you nailed it. Like Apple has the luxury of time, and right now people are giving them the benefit of the doubt. They are gonna see what other players do and what mistakes they make, and hopefully clean up on the back end, and be able to get where they need to be without making those same mistakes. So I think their bigger issue is China and manufacturing and tariffs and all that. So that's probably where most of their energy is focused right now. But I just find it interesting as like a market watcher that the narrative is generally pretty negative out there on Wall Street and among analysts, and the stock price is slowly but surely creeping up. So when I see that, I'm like, okay, there's a disconnect here, and there could be a surprise to the upside. But I think it ultimately comes down to the narrative and the story that they tell on the earnings call. Everyone knows kind of where their organic business is right now. They need to outline what the future holds and where they're investing and make a compelling case for investors.
Well, I also think like it's kind of a great time because think about this. Like this is probably the first year, maybe last year, where the Max 7 names actually perform differently. It's always been a bucketed approach before. Now it shows that AI, the super intelligence race is very real, and you can actually pick and choose which are going to be the winners and losers because how disruptive it's going to be. I don't remember the last time where you saw like a Tesla and Apple. I know it's outside, like China's an issue for Apple, EV credits removal for Tesla, but like they're significantly underperforming the other names like the Meta's, Microsoft, Amazon's. I don't remember the last time where there was that much of a divergence, and it's something that's great to see as a stock market geek. I guess you can say that. Oh, it's cool. It's finally they all have personalities and they can like track them differently.
It is true. It's almost like, before when you reference Mag 7, generally the trends were the same, and that's why you group them together. But now you can't make a blanket statement necessarily about Mag 7 performance. I love the personality angle. It makes me think of, they're a boy band or something, and then they broke up, and one of them's Justin Timberlake, and then you got, I don't know, one of the other guys, Joey Fatone, maybe.
Well, I think we can all agree Justin Timberlake is NVIDIA in this instance, the rock
Yes.
star among the group.
I don't know who Tesla would be, but we'd figure that out. We always go back to boy bands on this show because I'm on it. And I also just saw the Backstreet Boys at the Sphere, which if you have a chance to do, you should definitely do. Tom, you brought up tariffs briefly. The Dow's up 200 points this morning on news. We reached a deal with Japan. I was listening to some audio clips from the interview after on Bloomberg this morning. Trump said that Japan negotiates hard, but we negotiate harder. And so the market is liking that, and we're working through some of these other deals, although there was indication yesterday that that deadline might get pushed back again. So again, we continue to watch that. Tom, let's check in on the options market, though, specifically. I know you have some data around what's going on there in the moment. What are you seeing in the community regarding options?
Yeah, I think just in general, we're seeing retail use options at the same level they were during the pandemic. Again, what are options? They're providing, a way to express a leveraged bet, usually to the upside, for stocks that they're trading. So, I think it's just a sign of the environment. We're seeing lots of options activity kind of across the board, and specifically in some of these lower price names. So not only are you getting leverage from the stock being lower price, but you're also adding options on top of it. I think OpenDoor was 15% of the Nasdaq's trading volume on Monday, so it's something crazy like that. I'm looking at Wendy's. Wendy's is the the next stock getting some chatter. It's up
Yes.
$2 pre-market. So like again, we're kind of in this whack-a-mole market and don't know where things are going to pop up next, but for now, like, the risk appetite is there. People are looking for their next move, and again, I think it comes back to the environment. We're up 25% 2 years in a row in the major indexes. Over the last 3 months, we've seen massive moves in the major indexes and most stocks that people are trading: Robinhood, Coinbase, Palantir, all of those. So if you're looking at an opportunity and you're like, oh, I can make 10% in a day, suddenly that's not as interesting as something else that could potentially run 100%, 200%. And so I think there's just this sentiment out there that the environment is ripe for these types of squeezes, and people are swinging for the fences while the iron is hot, or however you want to state it.
Yeah, I mean, it's got to be almost like a psychological thing as well. I mean, retail traders are coming off great few months. They piled in April when the institutions were on the sidelines. They're feeling themselves a little bit. It's a little scary, but it is. And then some of these plays are nostalgia plays. Wendy's, I didn't even see that coming. Interesting to watch those names as well. Shay, I want to shift gears from Wendy's to cybersecurity, as we often do on this show. There was a pretty significant hack exploiting Microsoft SharePoint, which, as a side, is probably the worst of all the Microsoft Office tools, but this is basically their version of Drive. SharePoint was hacked, and apparently the government entity in charge with our nuclear strategy and all of that fun stuff was part of this breach. The commentary coming out was they don't think the bad guys have anything too bad, but they might have keys to get back in later. Again, this is another example of this cybersecurity theme, Shay. When you see these types of headlines, does it make you want to just go buy some more of your top names in cyber?
I think 40% of my whole net worth is in like the new age of defense. So I have a hefty position, but I think they also targeted China was like the bad agent in that attack. I think it's very interesting timing that the August 1st deadline's coming up and there isn't that much momentum, and this news story came out. I'm Tin Hattie, done. This guy's real specific now. You had Lockheed Martin just go down 10% yesterday.
Yeah.
What has been the rhetoric that we've been saying on the show for months? The new age of defense is going to get a much bigger weight of the DoD budgets. The new battlefield isn't missiles, jets, and tanks. It's digital. This is a perfect example of why the next new battlefield is digital. The priority for clearly the U.S. government's national security is the cybersecurity, the CrowdStrikes, Palo Altos. It's the, I know nobody talks about Axon, but they are truly the control center of public safety. And then you also have above your head, like the archers of the world, and you're seeing drones, and you're seeing Anduril just get crazy momentum in the private markets. I think that this is the beginning of a catalytic moment where these new age of defense names are going to continue their momentum, and they have a very long runway because it's in a way indefinite, the demand, because it's not like a capex cycle for like GPUs, for example. Like you accumulate all these NVIDIA GPUs, and then once you get to certain points, you have all the tools necessary to do whatever strategy you want. For cybersecurity, it's endless. You can't just like get a software, continue operating it, and you're done. You have to continue probably get the latest and greatest module. What's the next firewall they have to deal with? Identity, whatever it might be on the ecosystem of cybersecurity. Like it's an indefinite thematic that will constantly have demand. Yet, it's highly fragmented. You saw this, I think it was this week, SentinelOne's news on potentially getting acquired by Palo Alto. There's a lot of tier 3 and tier 4 players in the space that are not going to survive, and you're going to see them, a lot of these bigger players like the cybersecurity names like Palo Alto, be acquisitive towards those names. So I think that be selective on the new age of defense theme because it is highly fragmented. But if you choose a winner, CrowdStrike is a winner, Palo Alto is a winner, Axon's a winner, Cloudflare, nobody talks about, is a winner, then you'll just let the theme run up with Kager, and those names will just high tide result boats. But yeah, I'm not surprised to see this, and we'll start seeing more headlines like this on a normal basis.
Yeah, and then the other piece, trend that's happening in parallel with just increased cyber demand, because I agree, it's like people aren't just going to wake up one day in the future and not want to hack things. That's just not going to happen. But I was actually poking around. There's a vibe coding community on Reddit. Don't ask me why I was there. I was just checking it out. I don't spend that much time there, but I was there. And a lot of the conversations are around the security weaknesses. As more tools are created that let everyday people text to develop apps and sites, the security layer on all that is way behind sort of the UI generation and the the integrations with the auth platforms. And a lot of the conversation is, guys, when you launch something, it's not going to have that level of security that you had if it was coming from an enterprise yet. Someone's definitely working on it. But it is interesting because a lot of these, there we go, the opening bell. A lot of these vibe coding platforms, you could integrate Stripe payments. You could have payments data flowing there. There's a lot there. So I think that's the other thing, everyone being, almost feels like social media being in the driver's seat in terms of creating and building things, but the level of security is decentralized. I think that's going to be really interesting to watch as well. If you guys follow Lovable, a company out of Denmark, they've only been around a little over a year, and I think like 15% of the new sites launched on the web were Lovable sites according to their data. So something to watch there. Tom, I want to go back to you for a second. Looking just through community conversations, responses to email newsletters, the Daily Rip, which everyone should subscribe to, are there any other themes or topics outside of memes that retail investors seem to be cluing in on as we get deeper into earnings season?
Yeah, going back to Japan, the Nikkei hasn't done much in the last year or so. It was kind of the first market to take off. It was leading to the upside, and then it kind of took a break for the last 6 or 12 months. With this tariff news, it's starting to break out again. So I think international in general are kind of stocks that people are looking at, either the ETFs or the ADRs. There's a lot of focus. I know Jake yesterday was talking about some of the China names. So definitely overseas markets continue to be on people's radar. For Japan specifically, EWJ is the unhedged ETF and DXJ is the yen hedged ETF. So one provides local currency exposure, one provides a hedged version so that you don't have yen exposure and the equity exposure. So again, not super popular vehicles, but there are people that, again, if you have an international sleeve as part of your portfolio and you're making active adjustments to that, this is definitely one on somebody's radar. This is making new all-time highs today. So that's one thing. And then in the U.S., we're seeing a lot of catch-up plays in kind of the energy space still, or the new age energy space. The lithium and battery ETF, LIT, is continuing to see significant activity. I think lithium is one of those rare earths that's kind of difficult to manage the supply chain of, and so you're seeing a lot of interest around the domestic producer. Same thing for solar. I think I was on the show maybe 2 months ago talking about a contrarian play in solar. The narrative was pretty negative. That ETF is TAN, TAN. So we're seeing a lot of these kind of AI-related themes that haven't run a lot start to catch a bid, and as you can see, the solar ETF is up big this week and has had some nice gains over the last month or so.
Interesting. Lots of disparate things going on in the market. So let's go from lithium to like consumer names. Spotted this headline. Curious what you guys think. Well, first of all, we have Chipotle reporting earnings as well today. And then Philip Morris tanking 8% yesterday on weaker Zyn shipments. This shocked me. I feel like Chipotle and Zyn are the Kips Bay Finance Bro starter kit. So we'll see what Chipotle does. But Zyn, I guess this goes back to Shay, your comment about moats. Because Zyn used to be the only game in town, and now you walk by some of these bodegas, and there's like 12 versions of Zyn, and there's like sour candy apple flavor. Like, people are out innovating Philip Morris.
I think it's nearly impossible to have a moat in consumers' products.
Yeah.
The only moat is brand. I think Coca-Cola clearly has that. Yeah. You can make the argument Pepsi does, but anytime I go to any restaurant, they're like, "Oh, we don't have Coke, we have Pepsi products." I roll my eyes. It's very different.
You get up and leave. You're just like,
I'm done.
You're like,
I'm
done.
I'm out. This is enough. No, but it's also, yeah, Zyn is like tomatoes, like 12 of them. Like, I'm not. Whoever takes Zyn, there's no brand loyalty. It's part of the degenerate theme on like sports betting, doing zero DT trading, predictive markets. Zyn, like, there's no brand loyalty. I'm going to go to whatever's the cheapest, best bang for the buck. Also, That's part A on their market. The other part B is people want to be healthier, the younger demographics. You're seeing Pepsi do a probiotic, so like we talked about yesterday. You're seeing all these bubbly drinks that you are exhausted seeing, Katie, at the aisles.
Yeah.
I'm a very big participant in as the bougie person I am, I guess.
Yeah.
And yeah, I just Philip Morris. I don't know. I think it was a hot moments they had first. I want to say there was a first mover advantage they did with that, but it's over. It's not much.
Yeah. Well, now I feel like I need to go out and see what the kids are doing, if not Zen. There's probably some other fun, fantastical.
Listen to Ryan Cohen. It's Pokemon cards. They're turning GameStop into a Pokemon shop now, and that's the name of the game, the latest and greatest.
Yeah, but how are they staying up all night to trade cards and trade shit coins and, go ham and KSS if they don't have their Zen?
They get their Adderall from Hims and Her Health.
Oh,
There fits the degeneracy. It's all a circle.
I wish Howard Lindzen were here. It's literally all connected. You could plot this all out. It's wild to look at. Tom, you got a favorite Zen flavor?
No. I just.
What are you taking right now? What's your flavor right now?
What is shoved up in your gum at the moment?
Yeah, no, I don't have any upper deckers, lower deckers, whatever the whatever the verbiage is. I'm definitely not a Zen user, but it seems cool. I mean, I'll be honest, some days
He's like, I'd try it.
All the cool kids are doing it. It seems
we're all gonna do it next Wednesday on the air.
Yeah, it's Stocktoberfest. If you guys are like, hey, you want to try Zen? If you push hard enough, I might try it. So,
Yeah, and if you're listening from Zen and you'd like to be our headline sponsor, this is a great opportunity. We can put them in all the swag bags.
Yeah, exactly. So get a ticket to Stocktoberfest. We're going to have a panel about, Zen flavors, Monster Energy, Celsius. I think, speaking of Altria, I think they were just approved to sell their, what was their vape called?
Juul.
Yeah. So after
really
all
quick
these
on the
years,
draw with that one.
they can sell Juuls again in the U.S. now that there's 9,000 other competitors. So shout out to the U.S. government for handicapping.
I was going to say, Katie, you just revealed your vice really quickly.
I was like, I know that one. And, it's funny though with Zen because I have never dabbled, but I grew up in the middle of nowhere, and I tried the real stuff for the first time when I was 11 on a school bus. Someone gave me dip, so I'm like, what is this amateur hour synthetic Zen? I was on a bus in 5th grade doing dip. So I don't know what that says about me. I obviously made my way out of there, but man, degen economy coming on strong.
Yeah, I'm just mad I missed the trend. I live in the suburbs, and we have this thing called Dairy Barn. It's basically it's a barn, and you drive through and get stuff like milk, random items. On their billboard a year ago, they said we have Zen, and I'm like, whoa,
oh my God.
They're pivoting. The local deli is pivoting hard into the Zen market. So when I seen that, I should have aped into Philip Morris. But next time, I'll keep an eye on the Dairy Barn indicator for you guys and let you guys know if I see anything.
I haven't heard Dairy Barn in a hot second. Let's get off of Dairy Barn and Zen and dip for a moment and go back to what's happening in the market. Of course, the markets are opening. You heard the bell a few moments ago. We're up on the Japan news, as I mentioned. Beyond big tech, we got Google, Tesla, Chipotle reporting later, Mattel's reporting later. We've got some existing home sales data due Wednesday morning. I don't know if you guys caught this headline. Apparently the White House is signaling that they might want to remove capital gains on home sales. And it's because a lot of boomers, saw the home values increase, and they're just sitting in these big empty houses because they don't want to get absolutely destroyed on the cap gains tax. So I'm curious if you guys saw that. That would be a very major move that could really disrupt the housing market, it would seem.
I think they have bigger issues like interest. I think mainly it's not cap gains as much as more if I sell this house and I buy a new one, what's the interest rate I'm going to get? And that's causing the paralysis. I think, first off, I would love this as a clearly consumer. I think this is more of a unicorn, or that's more of a Nirvana story than an actual reality. But it's something that gets the headlines. I'm shocked that it got momentum like it did yesterday. I was at Fox when it was released.
Oh, really?
And I was I didn't think that was gonna actually make it. It's I thought it was Fugazi.
Yeah.
I wish.
Maybe we'll. I mean, there's other things that people aren't wanting to talk about right now. So maybe we'll get some of these like freebies. You know, maybe we'll be like, hey, yeah, you guys can have the no cap games on home. Just don't talk about the other stuff over here.
Just let it keep us our social security, guys. Don't get that away. Just keep your cap.
Yes, please, please.
Yeah,
Um,
I think just on housing, I think that's an interesting one. We're basically seeing home builders report. We had DR Horton, DHI report the other day, yesterday, I believe. It was up 15% on earnings. So we're in an environment where the sentiment is pretty negative. For 2.5, 3 years. We've seen kind of a frozen housing market, just because of where prices and rates are. We're starting to see more inventory come on board. There's more availability. The percentage of people who say that now is a good time to buy a house is like slowly ticking up because we're seeing that more inventory, prices come down. It's really regional. It depends on where you're at, but yeah, we are seeing some slow shift into more of a buyer's market in housing. And I think also on the new home side, the concerns are a lot of builders are making concessions right now for stoking demand because of prices still being elevated and interest rates. So we're seeing a lot of builders offer, rate buy downs, other non-price concessions so that they can keep the sale price high, but that they can provide more incentive and kind of a bit of a cushion for buyers who might be extending themselves a bit in this market. So yeah, housing is a bit of an anomaly. It's one of those things where if interest rates come down, I can't imagine that prices will fall alongside it, just because there is so much pent up demand from the pandemic. Like, there were tons of people who were locked out of the housing market. They didn't get on the boat in time. I was one of them. We ended up getting like a smaller co-op than we wanted, instead of like a starter home, because there was just nothing available, and we were being outbid by cash investors, going 100K over ask, and we're just like, this is nuts. So I think we're seeing, along with the overall growth trend in the market, we're seeing the housing market get a bit more healthy from a supply and demand perspective. But really the only thing that's going to fix the long-term issue is building more housing. And that's a really difficult conversation, because so much of people's wealth is locked up in their house. And so if you say, hey, we're going to build more houses to make it more affordable, and the price of yours is going to go down, like, nobody's on board for that. So it's an interesting dynamic. But from a stock perspective, sentiment is quite in the dumps for a lot of these stocks, and we're seeing some upside surprises on earnings.
I also think it's, again, I talk about like the new generation. Why am I talking like that as a 32-year-old? I got the insider angle with my fiance who's 26. They want freedom. They don't want to be locked in somewhere. I know like the appetite's always been the American dream. Make a decent amount of money, buy real estate, live happily. I think that real estate part of the equation is kind of diminishing in weight. And I think that, yes, maybe it's because we're all priced out of it and we're like, F you guys, we're going to beat the system now because the system's broken. That might be the case. And if the system gets fixed by prices going lower or more affordability, etc. But I also think freedom is a real thing. And I think a lot of people in the Gen Z, young millennials, they want that optionality. And I think that's gaining momentum with each and younger generation coming after them as well.
Yeah, when we talk about degen economy, it's not really an attribute of that group of traits to be wanting to be locked into something illiquid long term. That seems actually the opposite of what people want. So I think it's interesting just on investment styles. That is a very long term illiquid investment. That's not Kohl's or Woof or Bitcoin. So you're right. I think it'll be interesting to see, because is it, to your point, Shay, is it because we're all just like, whatever, we're priced out, so we're gonna hate on it? You don't get invited to a party, so you start saying it was a lame party, or is it like we just don't want that? And I think that'll be an interesting trend to see.
Or maybe they can afford it because of the degeneracy.
True. Yeah.
Yeah.
I mean,
remember the old headline, you can't afford a house because you're buying avocado toast? Now it's you can't afford a house because you're buying too many Zins and gambling on sports too much. It's
so true. Something crazy happened in New York yesterday. I don't think you were out and about when it happened, Shy, but somebody unleashed a humanoid robot on the street. Did you guys see this? I have a video.
I think it was
It
on
is
I saw it on a studio set on TV. Maybe a
it
round of that's what it was.
I mean, you guys listening, you know my stance. I don't like when they have limbs. I'll die on this hill. Someday they're gonna play this back. They're gonna find this clip and say she doesn't like our limbs. Let's go get her. But first of all, yeah.
Hello. How are you? Oh my god.
Oh my god!
I know the kids like. Yeah, I don't know if New York would be my test market, but it was interesting. I watched a bunch of clips. Some people were friendly. The kids loved it. Some people were like confronting it. And like confronting the people that were with it, but also confronting the robot. And I think you're starting to see, is there going to be an embrace of things like that? But when we talk about these armies of humanoids like that Elon Musk wants to build and others, I just picture a ton of these just walking around with your Chipotle order or your Zyn delivery via GoPuff. It's kind of weird. I don't know if you guys have any thoughts on this little guy.
It's first off, it's inevitable, guys. I'm sorry, but it is. It's going to be part of physical AI is going to be part of our world, whether or not you want to admit it. The initial phase will always be scary. I think it's more because of the TV and movies we've seen, where it's all been part of a negative lens. But it's the name of the game now, guys. Like we have to live with it. If not, it'll get replaced by it. I think that you're going to see a lot more advertising. Like we saw Tesla like tinkle with this a little with Kardashian photo op with the robots. I think there's going to be a lot more normality. Eventually, it's going to cost $25,000 to buy a robot. It's going to be across all the families because guess what? How much more time can you free up when you don't have to do the tedious task of cleaning, cooking? I don't think they're going to pick up your daughter and son at school by themselves anytime soon, but inevitably it's going to. Like it's going to free up. We're in this productivity boom. Robots are a major component of that. So like it's going to happen, but it's fun to see these kind of videos. And I do think that I know some boomers in my life that still have never used an AI ChatGPT yet. So like they're usually we're very, very, very far behind in like our inner circle when we talk about AI than what the world is actually dealing with AI.
Yeah, I mean, talk about robots picking up kids, but autonomous. I mean, they already have Uber for kids that people have. Uber's picking up their kids, and autonomous driving. You know, you kind of could just delegate childcare pickup to that if you wanted to. So it's going to be really weird to see that unfold. Tom, do you have any thoughts on the robot wandering the streets of Gotham?
Yeah, I definitely don't like it, just personally. I don't know, it kind of creeps me out. I also don't know how they got like approval for this. It seems like something that would require a lot of like just heads up to the city, but all good. Yeah, I mean, I've seen the movie I, Robot with Will Smith. He knows kind of the drill, so hopefully he can help us out if we ever need some assistance with these guys.
Listen, Tom, just take a Zen and relax. It's the future.
Yeah, I need to, just mellow out a bit. But yeah, I mean, it's cool for sure. But yeah, I'm more of the camp that like this stuff is going to take longer than most people expect. But I'm a boomer in a 30-year-old's body, so take that with a grain of salt.
Yeah, I mean, it's weird. Like the regulation, I never thought of the regulation. You can't fly drones in New York. Tried that, can't do that. But looking at this robot, you guys probably, I don't know, this is more like a girl thing growing up, but I just dropped a link for our producers in the chat. There was like this pet dog thing in the 90s that looked like, it was a Sega toy. It was late 90s, early 2000s, but it was basically a pet dog. And it's like, I feel like these humanoid robots ripped off the design of these dogs. I don't know if we can pull the visual up, but it's like the same design. So it's like, okay, what's allowed now? Is it going to be, there's going to be all these regulations, certain size, certain capabilities. It's almost going to be regulated like the gun industry, it seems. But wild times to be alive. Let's check back in at what's going down in the markets as we near the end of our time today. We have, of course, trade deals going on. automakers watching closely on the trade deals. We got the meme stock party. One we didn't talk about was Krispy Kreme. Krispy Kreme is also in the. I feel like this is like people are like, what would be funny, and that's what they pick.
Well, no, it's I lost money in betting degeneracy. I'm taking it out of from hands. I'm eating my feelings via Krispy Kreme donuts. It's all again. It's fitting into that ecosystem.
And I'm streaming it via GoPro, so we got the full.
Oh my god.
We got the full ecosystem. Yeah, I think one thing that stands out to me this morning is we've had a lot of positive news the last week or so. And under the surface, the markets are moving higher. But if you look at Bitcoin, Ethereum, and Litecoin, they're all kind of flat to downish. And, they're having some down day today. So I'm kind of looking at that as kind of a short-term risk barometer. If we start to see those come in, then, we're already seeing Donut, Wendy's, GoPro, like all of these moves are fading. So I do think we're kind of, again, nearing a time where things will get a bit more difficult. I don't know what the news is going to be to kind of throw the market off kilter, but for now, it just seems like it's taking a lot more good news just to get like some incremental progress in the indexes. So that's what I'm watching. I think we're in this kind of transition pause period, and under the surface, people are going to still trade the volatility as it comes up. So who knows what the next one will be. I will be doing some work after this because I'm sure I'll get some more media inquiries about what's going on. But it's still the mementum market for the time being.
Fun time to be a witness to this all, of course, in our shoes as well. It's good content. Sometimes when things are weird, the content's good. Shay, final thoughts. I know you got a busy day. You're hopping all over Manhattan. Any final thoughts heading into these earnings you're watching later and in this meme stock momentum?
I don't think we talked Tesla on this today's episode, so I'll do my thoughts on Tesla.
How do we do Zyn but not Tesla? I just got sidetracked for a second. Go for it.
Or talk robots and not talk Tesla. Today my thoughts on earnings. We all know it's going to be hideous. I think deliveries will be down in the mid-20s. I think that EPS is going to be down in low teens. The main thing about today's earnings will be, does narrative regain altitude? It's going to be about what the company is going to turn into, not what's been for past decade. I think that Elon's going to highlight a lot about what Tesla is going to become and how they're one of the few companies in the whole world that qualify being the leaders of the new digital economy. And when I say that they are paying the Elon tax is worth it because we get a front row seats to a company building the AI body and brain for mobility and robotics. That's going to be, it's going to be a mind-boggling TAM because if you think about it, human labor spend is what, $50 trillion a year? In 10 or 15 years, even if Tesla just gets a sub-share of like 5%, that's a massive re-rating. And I think that right now Elon is in a founder mode, wartime CEO, and he maybe has a chip on his shoulder that he lost some of his power that he had for 6 months of this year with that Trump first buddy relationship. And in order to gain it, he disrupts the world and builds a neural network for physical AI. And they have to take it because it's part of the productivity boom. So I think today's going to be more about, can narrative regain altitude? Can Elon reiterate all these things about Optimus, autonomy? What's the plan after the successful Austin launch? And probably barely talks about their EV business because let's be honest, it's not an EV business anymore. I'm curious to see their energy segment. It's a very small business, but it's also gaining a lot of momentum. And I think that the commentary on the conference call will matter much more than the actual numbers reported. So I wouldn't be surprised if we get a muted move initially off the print, and then we see the real move happening at 5 p.m. Eastern.
Yeah, I forgot this is the first one since the fallout. So I think you made a good point. Never underestimate spite as an accelerant to achievement. So I like that theory, Shay.
Also, I would love to hear some commentary on XAI merger because I've been very adamant that the new winners of this new digital economy need 4 things. First is data, first is chips, first is distribution, fourth is next gen brain. Right now, Tesla has the data, the chips, and distribution. They don't have that next-gen brain. That's what xAI has. So that's why I believe a merger between the two companies will create this powerhouse that gives Elon all his resources under one roof, and all the AI brains that he has under xAI can be utilized in different business segments that in the Tesla arena. So I hope he talks more about that on the conference call today too.
All right. Well, lots of great stuff ahead. Follow these guys for insights. Tom, of course, bringing the latest from the Stocktwits community. Shay has his thematics that he focuses on and goes deep on. We'll be back here with you guys tomorrow morning, 9 a.m. Eastern. Thank you for joining us, and we'll see you next time.